Recently, the Middle East has recorded slight recovery in growth momentum on the back of rising oil prices, but growth rates are still expected to remain below 2014 levels. You're watching Arabian Business. I'm Bernd Busman, and I'm here with Coface economist Seltem Iyigun. Hi, Seltem. How are you?
Hi, I'm fine, thanks.
So I suppose the first question is the most general one. What would you say the general economic outlook for the GCC will be in 2018 and 2019?
Actually, we are more optimistic about the economic performance from this point forward because, as you said, the oil prices are recovering, and despite the economic diversification strategies, most of the countries are still, I would say, dependent in terms of government revenues and export revenues to these oil hydrocarbon exports. However, with the recovery of the oil prices and also in countries like the United Arab Emirates, solid non-oil activity, we expect the growth performances to increase. For example, for the United Arab Emirates, we expect the growth rate to jump to nearly 4% this year from nearly 2% last year. And we expect Saudi Arabia to get out of the recession, the economic recession it had last year. So we estimate the Saudi economy has shrank 0.5% last year. And this year we expect it to grow by 1.1%. So we are definitely more optimistic. However, there are some still risks going on. This is mainly related to the volatility in oil prices. So currently, these Brent barrel prices hovering around between $65 and $70 per barrel are quite optimistic for further growth performance in the region. However, it may encourage some of the US shale gas producers to come into the market, which can then create a volatility on energy prices. So in this case, if the prices go down, then this situation may weigh on the growth performances. However, so far we are more optimistic.
And in the last several years, I would say there's been a lot of talk about the austerity measures being taken in the GCC, but how successful has that been from their perspective in terms of narrowing budget deficits, for example?
It was very actually effective because, well, for the countries like the United Arab Emirates, they didn't really suffer from a huge budget deficit. However, in other countries like Saudi Arabia and Bahrain and other like Oman, we saw that the deficit right after the oil prices shrank in 2014, we saw that the deficits were widening. However, with these fiscal reforms, we saw that the deficits have started to narrow, and for countries like the United Arab Emirates, they have even started to record a budget surplus. So we really have started to feel and to see the concrete and positive results of these austerity measures. However, in Saudi Arabia, these austerity measures have weighed on the economic performance because it's reduced the income of the households, disposable income. However, this year, the Saudi Arabia for 2018 announced a record wide budget, and the government intends to increase its spending. So we expect this higher public spending will help to offset these negative impacts of the austerity measures and will allow the country to support its growth performance.
And there's also been quite a lot of discussion about the risk of higher liquidity conditions in the GCC as we go forward. So what can we expect in that regard?
Actually, this is the this is the rates that are going up, and this is related to the U.S. economic health, because as long as the growth performance of the United States is going up, the Federal Reserve is hiking its rates, and it's now since late 2015 the Fed has been increasing its rates for 5 times. That and because of the peg regime, because the GCC most except Kuwait, the GCC currencies are pegged to the US dollar. The central banks in the region have started to follow the US Federal Reserve steps, and they have started to increase their rates. So we expect this situation to continue, because market expectations are that the Federal Reserve will deliver 2 or 3 rate hikes this year. So if this happens, it means that the central banks in the GCC will continue to increase their rates as well. So it would actually increase the cost of borrowing through the bank loans. So we can expect borrowing cost of the companies to go up, but the liquidity will continue to be abundant. At this stage, it will be the rates that will go up, but we expect it to stand at a manageable levels.
See, and I've seen that you've mentioned in the past that in the UAE, at least, private consumption is kind of a key economic driver. But is that unique to the UAE, or how does that compare to the other countries of the GCC? Is that a regional trend?
Yes, this is a regional trend, and in the United Arab Emirates, the domestic private demand actually accounts for around 40% of GDP, and we expect it to stand at this level. And for especially the United Arab Emirates, the retail sector is very important, and because the country enjoys a very wide consumer base. Of course, this is almost the same for the other countries as well, but we expect this trend to continue, and with a solid non-oil activity and with higher job opportunities around the region, in line with recovering economies, we expect this trend to continue and the private demand to continue to provide higher contribution to the GDP ratios.
Over the last few months or even longer, I'd say at Arabian Business, we've been writing a lot about the different investments being made into Dubai's infrastructure, especially related to Expo 2020. But what sort of knock-on effect would you say this has to the UAE's economy as a whole, especially going forward?
Well, the construction sector is one of the main pillars of the United Arab Emirates economic diversification strategy. And when you see all this construction activity going around, it shows you that there is still foreign investors' interest in this sector in the country. Of course, the driving force is the Expo 2020, but also it's a sign of the health of the non-oil economy going on. So the construction sector accounts for 13% of GDP, and with the positive contribution to the construction investment of this Expo 2020, we expect this activity to continue. And even after that, as long as the oil prices support, we expect this activity to keep up and have a positive contribution on the whole country's GDP rate.
Excellent. Well, thank you very much. That's very interesting and insightful.
Thank you.
I'm Bernd de Boosman. I'm here with Seltem Iyigun from Coface, an economist. I'm sure we'll be hearing more about the GCC's economy in the next couple months. Please check ArabianBusiness.com for more news and follow us on YouTube and social media. Thank you.